Phil, property prices, will they surge in, I think it's supposed to be 2025, or remain flat or decrease? So this was to just review, I guess, using some pricing here. So this is the last 12 months across the country. So the national average has gone up about 3.1% over the last, or capital city average, I should say. The national average was 7.8%. So what we can see here is capital cities really didn't perform that well last year. The national average was 7.8%. But if we look at the market and going also back to that boom report, Brisbane, Perth, Adelaide. So again, I still expect these three to be in and around the mark if we're talking about a very generalized, broad approach to performance. Doesn't mean that we're investing there as a business. We're making some isolated purchases, maybe more in Brisbane. Brisbane in Queensland. But what I would expect to do is we're talking about as a broad level, I'd still expect those three to be at the higher end, but I don't expect them to be as high as they are now. Keeping in mind, I recall when had just returned to the mastermind format, I think Perth was in the 25% region or somewhere around that mark, maybe even 28. So this is losing steam. I think Brisbane has held pretty consistently. Adelaide has definitely dropped off a lot from that review as well. And the rest have kind of held the line. Darwin's picked up a little bit. I see some people in some property investment groups kind of pushing Darwin. But again, I guess it's going to, I guess, to your overall question, Phil, just like anything, you're going to have a performance bell curve where your bottom end of your bell curve is going to be quite poor. Then around about 80% is going to sit in the middle. And that 80% is just going to be based off how the general market's doing from an economy level. So no one can really kind of predict where things will go from an economy level. There's already talk about rate cuts, but then there's concerns about the Aussie dollar, commodity prices, all these kind of things. What we do know, if we stick to our principles, we remove our risk exposure, we allow the data to point us in the right direction on top of that, we will be more likely than unlikely to really sit quite high in terms of the performance side of things as well. And it's something as a business for properties that we've been purchasing since 2018, those properties now, which are, 7 years plus in holding, the CAGR results on those properties is close to 10.5%. They've actually spiked up. We will try and get something out, maybe by email or something. I'll speak to Ian regarding that. It's a bit of an overall view, so you guys have it in a format. But the properties last year were closer to 18% compounding annual growth rate. So that was higher than everything in terms of those locations. So it's really about picking out the eyes of the best locations to buy and being really strong through our purchasing side of things. So Phil, for us, I guess we can never really know how the whole market's going to do, but I do feel that towards the back end of the year, if we've had 2, 3, 4 rate cuts, I think we start to see everywhere start to take off. Just some markets will be more aggressive than others a little bit. So which state to invest in 2025? That one is from Walid. And the next question is from Orjul. What is your prediction for Melbourne? So for those of you who've maybe been watching, apologies that you're always hearing me crap on about it, but we have been buying quite heavily in Victoria. And what I've done is prepared a slide where we've kind of purchased from September onward. So we're talking about basically with holidays and stuff, we're basically talking about 3 months. What you will see here is a large bulk of our purchases are happening in Victoria, and it is something that is kind of just gradually creeping up each and every month. Now, some of the purchases here, some of the WA purchases, not many properties in WA are passing our pricing. So it's not to say it's a bad buy, but it's such a heated market, it's really hard to buy well. New South Wales has got some good representation, but that is all going to be in regional New South Wales. Queensland's still offering, some good opportunities. They're basically all regional Queensland as an FYI. And then Tasmania, I guess to put this in perspective, it shows only 7.2%, but we're talking about a couple of very isolated pockets in Tasmania. Tasmania as a whole is about 500,000 people or so living on the island, and there's not a whole lot of listings coming through. So if we were talking about percentage of buys versus what's available for us in that market, Tasmania is actually the number one market we're buying in. There's just not enough volume to compete with somewhere like a Victoria or some of these other states. So we're really bullish on Victoria as a whole, I do know that a lot more buyers agents have started to buy into Melbourne at the moment, Melbourne and regional Victoria as well. So I would expect that to, be around this mark, potentially even increase. And it is an area that of interest to myself. I am local to Melbourne as well, but again, it's still an interest of it for myself as well, and it's for our clients as well. But it's not to rule out any of these other states. If the deal stacks up and the parameters are still presenting really strongly, there's still quite a few areas out there to purchase. But thanks for flicking through those questions. That was from my listener, Jill.